All right. Good morning, good afternoon, possibly good evening, depends upon what time zone you're in. My name, excuse me, my name is Don Kaufman, and we're going to get started here. Well, right now, please chime in and let us know that you hear us. All right. Maybe if you would chime in where you might be joining us from today. I'm kind of reading the chat right now. Everybody always asks me if this is live. So yes, we are live. If you just missed the a moment ago, I had trading application. Sometimes I forget that my screen is being broadcast. I'm up here checking positions and so forth. It's okay. It's part of the program. With that, let's get off and rolling here. Look, you can even see me now. So welcome. Excellent. So I am broadcasting today from Paradise Valley in just outside Scottsdale, Arizona. I'm actually headed back home. This is one of our properties, but headed back home to the U.S. Virgin Islands next week. Next week, going back for hurricane season. I wish I were actually joking about that, but I really am going back for hurricane season. I don't want to leave. I don't want to leave the house there unattended during storm season. So it's good. Al, don't mess with me, Al. So again, I'm going to give you kind of a brief introduction, some informalities right up front. So welcome everybody today. This is, of course, a TheoTrade presentation. If you have no idea what a TheoTrade is, I'll explain that as we go along this morning. I'll explain a little bit about maybe my background as well. But hey, listen, throughout the course of today's presentation, you can ask questions. That's fair game. Today's presentation, of course, it is live. Everybody asked that. And as I was saying, you can see the exact time, date, everything on here. We'll even fire off a couple of trades possibly throughout the course of this. I'm just always curious where everybody's joining us from. We get people from all over the world that tune in now to Theo on a day-to-day basis. So with that, and you'll see me sipping some coffee quite frequently here. It's good. It's good coffee. Before going back to the island, it's hard to get really good coffee on the island. So here, I'm consuming as much as I possibly can right now. All right, let's get down to it. So welcome everybody. Again, feel free to ask questions. I am reading the chat in real time. When I say that, I mean, you'll see me look around over here. I can show you guys a little bit around my office when we're kind of, done today, but I've got a monitor here, a monitor here, a monitor here, a monitor here, a monitor there, a monitor there. It's a 6-screen system. Do you need 6 screens? Absolutely not. Why do I have 6 screens? Because you know what? For trading, I literally use 3 of them, but to be able to run a broadcast takes a little bit more. So I am on a 6-monitor system right now. Just makes my life a little easier. So you'll see me looking around a little bit. Of course, I apparently came out of focus there a little bit too. Come back around. Anyway, I'm moving around too much apparently for the camera. Oh, this is going to be just great. Usually that would knock it back, but yeah, not so much. All right, with that, I can't win today. I just cannot win. I don't think I've ever had my camera out of focus that long. There we go. We're back. We're back, baby. Yeah, it's one system to drive 6 monitors. Just a couple extra video cards here and there. With that, as I said, let's get into it. So today we're going to be discussing inflection point trades, high probability income generating system. Again, my name is Don Kaufman, and you are watching a TheoTrade presentation. Copyright disclaimer. Listen, we're based out of the U.S. Virgin Islands. If you ever need to get a hold of us, the easiest way to get a hold of us here at TheoTrade, shoot us an email, support@theotrade.com. The average turnaround time for an email right now is only about 18 minutes. So by all means, email us. It's a lot easier to get a hold of us that way. Here's a risk disclosure. So we're not financial advisors nor broker dealer. Now, I always throw that in there. The reason specifically for me, I know a lot of people always have like disclaimers. The reason for me, I spent 15 years in the brokerage world, and I'm going to discuss a little bit about my background and why that's so critically important. Throughout the course of today's presentation, we'll discuss a little bit about, for instance, day trading margin rules. Everybody familiar with them? Day trading margin rules. Okay, they drive everybody crazy. You know what? Quite frankly, I'll show you how to circumnavigate those today, if that's all right with everybody. And I like to do stuff like that. After 15 years in the brokerage side of the business, I think it's fair game to share some of the insights that are maybe not so well known. With that, let's get into it. So this is why you're here today. We're going to talk about a strategy that thrives in the midst of extreme volatility. One of the things that I think most have come to a conclusion on, okay, is that markets are not going to be the easy cakewalk. I mean, we're only a week removed from people talking about the meme stocks again, which is just shocking to me. So it's obviously that's over and done with. You know, Bed Bath and Beyond got well, the Beyond portion of that. Nevertheless, okay, in this environment, it's a rising interest rate environment. We've got inflationary pressures. I mean, instability is surrounding us, and I think everybody recognizes that. The only thing that I ask of you today, first of all, I would pay very careful attention. I constantly adding slides to this presentation, and I am always changing, the course of action that we're going to follow here today. But we're going to cover a tremendous amount of material in the next 90 minutes. So sit back, kind of relax, but definitely keep focused here, because keep an open mind regarding this is not about like MACDs or Fibonacci's or Bollinger Bands, what you think is going to happen next in the marketplace. The only thing that we can take, the assumption right now moving forward is that there's going to be volatility. And we're going to learn to embrace it, learn to embrace Federal Reserve interest rate chaos, and recognize bear markets and volatility can benefit even the most novice traders. If you are concerned about risk, we're actually going to show you a single strategy that shows you how to cover risk. So you're going to learn to mitigate exposure while generating monthly income on the other side of it. We're going to talk about real capital, real trades. I mean, listen, this is, specifically coming from me. Talk is cheap. You're going to actually see trades throughout the course of this. One of the things that I'm adamant about, what we do here at TheoTrade is completely no holds barred. I will show you every trading account, every dollar at risk. Again, will show you, when I say every trade that I do, I will show you profit and loss on a year-to-date basis. When I say no holds barred, again, I mean just that. When I talk about like profit and loss, okay, there's nothing. This is the thinkorswim trading application. There's nothing to hide here. I'm up $101,000, okay, on a year-to-date basis. And of course, everybody's like, well, how much capital is that based on? There's 300,000 in this particular account right now. I've got other accounts as well. I've got a smaller IRA over here still at thinkorswim. I've got another IRA over at Tastyworks. So no holds barred. We showed absolutely everything in terms of account values, trades, stocks cheap. I'm going to show you 18 months of inflection point trade results. Next in the docket, we're going to talk a little bit about small accounts or retirement accounts. Everything, and I mean everything that I do here today. $2,000 account, fine. Retirement accounts, good. I'm actually showing you my IRA. All of those can potentially receive results. And of course, we're going to find a monthly income strategy for your portfolio just can't live without in the midst of volatility here and inflection point trades, and why you've probably been looking for this strategy. So let's get down to business here. We are going to give you today our auto expected move indicator. Stay with me right until the end of this webcast. So I just wanted to bring this up before I even explain a little bit about this. Okay, this is a screenshot of the expected move indicator. Now, I'm a big advocate of using a live trading application. One of the reasons that I like to do these presentations from the markets live is so that I can just show you. Click on Tesla, click over here on auto expected moves. What auto expected moves does, it's how the option market is depicting risk moving forward. So in effect, what that means is, I'll just draw on the screen here momentarily. If you take a look at these three lines, there's a central line here. That's just where the week started, okay? Then we have the upper edge and the lower edge. Those are what we term expected move. Now, if you think about expected move, people are like, what is expected move? It's how the option market depicts risk moving forward. So in effect, if you think of Tesla being a wild child, okay, it is a wild child, but look how well it's adhering to expected move, okay? There's some breaches right there, but generally speaking, adheres to expected move. So you can learn a tremendous amount from this particular study. And I implore you, stay with me right until the end of the webcast. It's a $500 value. I will give you a link to the expected move indicator, right? Onward and upward, a few housekeeping items. As I said, this is, I'm going to move at a pretty good clip today. Shut the door, turn off Skype chat, whatever else might be distracting you. Phones maybe on silent mode. Definitely close Facebook. Nobody uses Facebook anymore, right? Kick out the grandkids, kick out the kids. You took the time to be here. The dog can stay, but you took the time to be here. And one of the things, it's important. Again, I'm going to run through a huge amount with this. So focus on being here. Here's a little background on myself. If anybody here brand new to TheoTrade, never really seen one of our presentations before, or unfamiliar with myself or Theo at all, because I'm going to give you the dime tour here. Here's just a little background on me. So people constantly ask how I got involved in this business. I grew up around it. Like I literally grew up around traders. And I started trading in the late 90s. So it's crazy to think of this, but I'm 24 years into a trading career. I started in 98. I actually started on the floor only about 3 weeks before the fall of long-term capital management. It's kind of an interesting time to start. Anyway, I grew up around traders. I was down there for about 2 years. And I actually I ran into a couple of individuals and they said, hey, we're starting a brokerage firm and we'd love you to come on board. Well, that brokerage firm had to be none other than thinkorswim. So I went on to actually build and then run the entire education side of the thinkorswim platform. I then went on the executive team. We took the company public in 2007. I was on the executive team when the company was purchased by TD Ameritrade in 2009. I had a 5-year lockup clause. So I stayed with TD Ameritrade until early 2015. I exited. We launched TheoTrade in 2016. And again, much of the education that you're going to receive here today comes from that heavy background, not of market making. Market making is so passe. What market makers did 2 decades ago versus now, it's completely changed business. But what we did learn is our time at thinkorswim and TD Ameritrade, we got to see everything that you did, okay? I would definitely consider myself an expert in terms of client order flow. And what that basically means is I could see everything you did and studied it. So how we actually built education at thinkorswim and how we built education at TD Ameritrade, we studied accounts and we actually find out what works and what doesn't. The only problem was inside of the walls of TD Ameritrade, you're limited as to what you can do and say based on regulations. So for the most part, we waited, okay, and I say we, all right, many of us actually left the thinkorswim and TD Ameritrade group, and several of the individuals followed us right here to TheoTrade. So what you're going to learn here today comes from watching literally billions in others' mistakes, but more importantly and more appropriately, the knowledge of what works best, specifically for retail traders. And retail traders, that's you, okay? You ever need to get a hold of me after today, email me. Again, I always like to make this very clear. We answer emails here and we do talk to clients. This is not the last time we have to talk. It's just Don Kaufman, support at TheoTrade. We use a common inbox, support at TheoTrade.com. Just put Don, you don't even have to put my full name, just put Don in the subject and that email will go right to me. All right, onward and upward here. So I still appear on TV broadcasts. This happens to be TD Ameritrade TV. I actually just did a spot this morning on TD Ameritrade TV. I had to get dressed this morning. It's been horrible. This is actually one of the more memorable, broadcasts on CNBC. It's myself pitted against Kevin O'Leary. Let's get down to business. Listen, okay. One of the things that I want to start with is volatility has arrived. Volatility has arrived, and it's not going to abate anytime soon. So I want to be crystal clear of what I mean about that. Inflation's still running red hot. Maybe it peaked, maybe it didn't, neither here nor there. The Fed pushing rates higher, and contracting a balance sheet, strong dollar, exports inflation. By the way, just to mention for a moment, I'm talking about things like the dollar. Why not just show it? When I talk about strong dollar, you realize you can bring up the dollar. Here's a maximum chart on the dollar going all the way back to the year of 2000. Okay. We're the highest print in the dollar right now is the highest print in the dollar since all the way back here in 2002. So one of the things people don't recognize is we're exporting inflation right now. Higher dollar commodities are actually priced in dollars. Not only is it beating up their currency, but it's also, well, pricing things like natural gas in dollars. Geopolitical risks are proliferating. Like there's nothing great to talk about when it comes to the economy. I just read an article this morning. I don't know if you guys saw it. It's on. It's all over the media. But 1 in 6 right now can't even pay their utility bills. Okay. I mean, there's not a lot that I can peg other than this. It's game on. Just embrace the chaos. Markets got real in 2022, and stock picking and Reddit boards aren't just. This is not going to cut it. Okay. It's just not going to cut it. You're going to need a strategy that embraces the chaos and volatility. I'm not going to sit here. I'm not going to sit here and preach to people about a bull or bear market, because I'm going to tell you, quite frankly, it just doesn't matter what you think. Okay. I love the explanation the other day. I do want to deviate one more time to this, and I'm going to go to the QQQ. This is the Nasdaq, right? So one of the things I wanted to point out, the Nasdaq, I mean, obviously has had this monumental move to the upside. Okay. But literally the other day, people said, don't worry, we're in the next bull market already. And, I'm like, that just doesn't make a difference what you think. Between here, okay, and here, let me change the pen color so you guys can see it a little better. Between here and here, this was between 2000, okay, to 2002. Did you know that we entered and exited a bull market 7 times? Okay, so we're at 1 right now. So again, it doesn't matter. I'm not going to sit here and preach to anybody about a bullish or bearish market. Bottom line, just think of chaos and volatility. And as long as that chaos and volatility is there, embrace it. And just embrace it. Don't rely on directional bias, because how good are you at picking direction right now? Okay, you got to reduce risk while substantiating monthly returns. That's all you can do, right? And that's okay, because that's what we're going to talk about. We're going to talk about inflection point trades. Higher volatility has resulted in significantly more options premium. Now, time out. I said the O word. I said options. So we are going to talk a bit about options today. Listen, I always run into people, even today, it's 2022, be open-minded. But I even run into people today that are just, bent against, like, I'm just not ready for that options thing. You are. Just sit back and relax. Okay. I'm not here to you need to trade options. But I'll tell you what, it makes your life a lot easier right now. Okay. So there's a lot more premium in options right now. And again, even if you're one of those individuals that's like, I'm never going to trade an option. Okay. I'm okay with that. Just sit back, relax. Okay. Everybody relax. And I'm going to take you through a little bit about why options are so important in today's marketplace. I mean, options in most cases are the cart now leading the horse. And so few people understand that the options market, when people talk about things like a gamma squeeze, by the way, can be to the upside or the downside, but gamma squeezes are are fueled by options markets. That's what it is. So we're going to talk about these inflection point trades. Inflection point trades, they're designed to sell options premium while reducing risk. So, some of you guys have come around and you're like, I've sold options before. Great. Well, then you know that there's a lot of risk. But, listen, our design here is one trade, one hedge, one end goal. What's the one end goal? Okay. I mean, what do you think the end goal is? To make money. That's so again, it's one trade, one hedge, one end goal, make money. Learning to sell options. Again, many people have heard through the grapevines that selling options is a way to make money. How many people have heard that? And again, I'm watching the Q&A here, and I'm looking around a little bit because I've got the Q&A over here, the chat over here. I just want to make sure everybody's on the same page, because people constantly hear that yes, selling options is a great way to make money. But if you've experimented with it, what happens to a lot of people when they sell options? I'm just going to tell you, okay? Like there's one thing I want you guys to realize as you go through this, okay? And again, I know a lot of people listen to a lot of different presentations, okay? I'm just going to throw this out here. Listen, the buck stops here. There's nothing that I haven't seen in this industry. For 15 years, I had access to all of your accounts and everything that you've done. Okay. Thinkorswim was unequivocally the largest trading application, okay, at the time that I was there. Bar none. Nobody even came close. We had triple the options order flow of the nearest competitor, okay, when I left TD Ameritrade in 2015. Nobody even had anything close to the options order flow. Again, we were 3 times the order flow. So when I say the buck stops here, I've seen it all. Okay. And I'm going to tell you right now, what people do with selling options is they make money, make money, make money, make money, make money. Boom, got hit by a truck because they have no idea how to mitigate risk. And if you ask anybody that's traded options, that's exactly what's happened to them. They're just like, I was making money, and then did you get the license plate of the train that hit me? And I'm like, train doesn't have a license plate. Well, it hurt, right? If you've experimented, you're going to know full well that there's risk. Today's strategy is to actually separate myth from real risk, the fact from the fiction. But basically what we're going to do is we're going to strategize and say like, yeah, we're going to go out and we're going to sell options here, okay? But at the exact same time, we're going to have a risk mitigation tactic in play, okay? And again, I want everybody to know, do not panic, right? Maybe you know nothing about options. Maybe the O word is new to you. Anybody here new? It's pretty quiet in the chat room over here. You can chat in. I won't tell anybody. Only I can read it. I can make it so that everybody could read it. That'd be exciting. Anyway, it's essential. Like if you don't control risk, there's no reason for being in this business. But again, maybe you know nothing about options. It's fine. Okay. I'm gonna ramp you up. If you're brand new to this, look to grasp big concepts about probability. Look to grasp big concepts, about how to control risk. That's it. If you're new, big concepts, control risk, high probability, right? If you're experienced, and I'm going to tell you right now, if you're experienced, you are going to be looking at the finite details, and there's going to be a lot of finite details because, again, I'm going to try to cater this to both sides of that equation, which is not easy, but we're going to kind of straddle the line between the basics and the extreme. So the last thing I do want to say this is, don't tell me that you do not have enough capital in the account. One of the things I want to really emphasize here, you can do this in a retirement account. You can do this in a standard margin account. You do not have to have considerable capital any longer to sell options premium, right? It's incredibly, incredibly important, okay, that people understand that, because many of the rules in this business have now changed. So let's jump into it. So there's a lot of different terminology around selling premium. Like people have heard like selling options, selling premium. They've heard of credit spreads. They've heard of, bull call spreads, bear call spreads. Like a bear call spread, would be selling premium. A bull put spread would be selling premium. They've heard of delta neutral. They've heard of the term selling naked. They've heard the terminology iron condor. Okay, selling premium. Listen, you can make bullish trades. You can do bearish trades. Generally considered most selling premium for today, I'm going to be much more what we term market neutral. Market neutral implies like I'm not going to pick a lot of directional bias in here, but I wanted you guys to know that because sometimes I'm talking about selling premium or selling juice, and people go, what's he talking about? I'm talking about selling options. Talking about selling options, right? So with that, how our members are doing year to date, okay? Big techs, by the way, it's kind of a halfway through the year. Big techs, thanks to the training, I'm up 23% in one account, 18% in my IRA. Now, granted, and again, I do like to display this. Here's the QQQ. Year-to-date basis is still down almost 21% in a year-to-date basis. So individuals are up 30%, 190%. Here's an individual, Timothy, he's down $1,000, but since he joined TheoTrade, he would have been down a lot more. Here, June 16th, I'm up 67% in my IRA. Duke up 10%, best year ever. Okay, this isn't a wicked down market. All right, let's get down to business. Okay, profitability and probability and profitability. Your trading is always going to be based on probability, whether you like that or not, or whether you know that or not. Trading is based on probability. I mean, you and I can create trades all day long with a 90% probability of success, but you're going to, you can still lose money. And how many people think about that for a second? Every single day, without fail, we get anywhere from 5 to, let's say, 7 emails on average. And people always ask us, okay? And I'm telling you, the email says exactly this: how often are you right? Okay. People literally say that all the time. How often are you right? Anybody? How often are you right? It doesn't mean anything. You want to see how often I'm right? I go to the thinkorswim platform. I go over here to the trade tab. Okay. I know maybe you know nothing about the marketplace. I'll type in spiders. Okay. I'll type in spiders for right now. Spiders are kind of a marquee product. I'll open up an option here. I don't know, 58 days out. Okay. One of these columns, I'm going to switch it to what's called probability out of the money. I just want to make a quick point, just a quick point. Look, if I sell this option, and people are like, you don't even know what an option is yet, but I can tell you what probability out of the money means. Okay. It's the probability of you making money on this. There's a 90% chance. Okay. The point to be made over here is that, any monkey can be right 90% of the time. But that doesn't imply that you're going to make money. And I like to tell people that, because they come in here with this, oh, it's all about being right. And I got my MACD and my Fibonacci and my Bollinger Band, and Elliott Wave has done this to me. Okay, listen, you can create trades that are right 60% of the time. You can create trades that are right 90% of the time. You still lose money. Probability alone does not make you profitable. And if you don't remember that, okay, you're already dead. So we're going to learn to sell some options premium, okay? Because selling options is more than finding a high probability trade. It's like selling options is more than going, I have a 90% chance, okay? That's all well and good, but anybody can find a high probability trade in a matter of seconds. Did I already qualify that statement? Yes, I did. So inflection point trading is a system to find, trade, and hedge all in one transaction. Find, trade, hedge all in one transaction. Okay. And by the way, I'm just gonna dive right into it. So for those of you that are a little newer, strap in. Here's the point. I'm gonna get some of you up to speed on some of the more basics. Then we'll work our way into the extreme. Bear with me here as it's hot in the desert. Okay. It is hot in the desert. I'm cooling it off a little bit in here. Sorry about that. All right. I like to move around a little bit, and I'm at a sit-stand desk, but I feel rather confined at present time. I just built this whole computer system, scared to death to raise up the desk, fearing that the wires might be too short, things shorting out. That would be awesome. Let's get into it. Let's talk a little bit about these inflection point trades, okay? When it comes to inflection point trades, the first thing to understand about inflection point trades, okay, is see this is a stock. We are not going to own the stock. We don't want to own the stock. We don't need to own the stock. We don't need no stinking stock. Why do we not need the stinking stock? Because stock carries what? Risk. Okay, and you go, it's not that much risk. It's only $100 stock. Listen, just look at the last couple of days. We were going up, we were going up, we were going up. Whoops. Okay. I mean, it's just not worth it right now. Like, there are reasons to own stock, and I get it. Okay. There are times where the markets are just wild to the upside, but people, you got to listen to me on this one. Okay. You've been roughly in a zero interest rate environment. Doesn't matter what you think. You've been in a zero interest rate environment roughly since the financial crisis. Wake up. 14 years has gone by of a zero interest rate environment. Okay. That's not going to work anymore. And as such, riding a bull wave and riding off into the Fed sunset, the Fed ain't got your back anymore. They're not going to be there to backstop you. This is going to be a rough run for the next 5-10 years. You are going to be dealing with, okay, this nasty zero interest rate hangover. Okay. And again, it's not going away anytime soon. And again, it's okay if people, somewhat disagree with that. Maybe the Fed will reverse course. You're right. Maybe they will, but they're only going to reverse course after they inflict incredible damage. With that, I'm not comfortable owning stock. So in this first example, we're just going to talk about an option. And in this example, I'm going to talk about buying one first. Okay. I'm going to buy a 120 call. And I just want to keep this super, super simple. We're going to buy a 120 call and we're going to pay exactly $1 debit for it. Time out. So if I buy the 120 call and I pay $1 for it, look, the stock is trading at 100. Some people are so brand new here, they don't even know what a 120 call is. Options, okay? Options have rights and options have obligations, but options also have a time frame. Let's say this option is good for 2 months, 2 months of time, okay? What is a 120 call? A 120 call gives me the right, but not the obligation, okay, to buy the stock at 120. Now, do I have to buy the stock? No. So why am I buying a 120 call? Well, if you're buying a 120 call, reasonably speaking, you must think the stock is going to go where? Up. And in this case, up huge, because the stock has to go up 20 bucks just for you to be able to do what? Not even really break even. It's got to go up 20 bucks just to have a hint of profitability. It's got to go to 120 plus the dollar. So it's 121 just to be able to break even. But if the stock does run, for instance, to 130, you're a winner. That is something that was done frequently in 2021. People were just like, roll the dice, roll the dice, roll the dice. Boom, stock goes to 130. You're like, look, what's a 120 call worth with the stock trading at 130? If you have the right to buy the stock at 120, everybody else in the world has to pay 130. What's that going to be worth? Again, I can't stress to you enough. I'm targeting, first of all, people that are brand new and not understanding what a 120 call is. A 120 call gives you the right to buy the stock at 120. Okay, you're buying the 120 call. You have the right to buy the stock at 120. And if the stock gets above 120, okay, you start to hit degrees of profitability. How profitable is that going to be remains to be seen. But if the stock goes from 100 all the way to 130, you have the right to buy the stock at 120. But do you have to buy the stock? No, you have a 120 call. Okay, 120 call, but the stock trading at 130 is worth at least $10. Obviously, you paid $1 for the trade, so you're up 9. Okay, and that's got a pretty phenomenal risk reward. But then you ask yourself, the big question mark, what are the chances of the stock going from 100 all the way to 130? Like a stock going from 100 to 130, that's a 30% move to the upside. Okay, can that happen? Yeah, I mean, look at the last couple of weeks. It was happening until snap, Friday, Monday, it's all over but the crying. No, there's still some crying, okay? That's not what we're here to teach. Right? We're actually going to look at the sell side of the marketplace. And in this case, okay, we're going to go out there, instead of buying a 120 call, let's go in here and let's sell a 120 call. And the 120 call is going to be trading for $1 credit. So I'll do this now, sell a 120 call. And the 120 call is trading for exactly a $1 credit. Okay, time out. A lot of people that are new to this immediately look at it. Okay, it's a good day to actually do a session because it's pretty quiet in the market. A lot of people look at this and they go, wait a second, you sold a 120 call, but I don't ever remember you owning it. Okay, you don't have to own it, right? I'm selling a call to open. And when I say sell to open, in options, there's always two sides of a transaction. In every option that's traded, if you buy an option, somebody sold it to you. If you sell an option, somebody bought it from you. Okay, there's always two sides to the contract. On the contract, one person has a right, the other one has an obligation. If you're a buyer, you have a right. If you're a seller, okay, you have an obligation. In this case, if you sell a 120 call, let's just get down to the meat of it. If you sell a 120 call to open, okay, you are obligated to give somebody your stock. There's the stock at 120. Now, time out. Do I own stock? Do I own stock? I'm not going to let this thing go on unless you guys let me know. Do I own any stock in here? Please answer. And the answer is no. I do not own stock. Nobody wants to answer that one. I don't own stock. You go, so what is this called? And again, I'm trying to evoke a certain response from you. And for those of you that understand options, you go, this is called selling naked. It's as dirty as it sounds. It's actually called selling naked. Now, I'm not implying you need to go out and sell naked, but for the example, you need to understand in context what selling naked is and what it does. Okay. So here, I'm going to go out and I'm going to sell something, and I am going to sell it naked. Now, that's not what an inflection point trade is. It's not. Okay. Part of it, but not. The inflection point, okay, seeks to go out and to sell premium. And I need you to understand, okay, we are selling something that is what I call nosebleed seats. You guys know what nosebleed seats are? Okay. If you go to a stadium and your seats are so bad that you're like, seriously, I am closer to the game through my TV than I am actually sitting in the stadium. You're not even like at the tailgating party. You're that far out in the boonies of that stadium. But I'm selling something right now, okay, that is 20% OTM. OTM stands for out of the money. I'm selling something that's just miles away from where we're presently trading, okay? Now, how often am I right in here? We'll get to that in a moment. But once you sell a 120 call, what's the most you can make? If you sell something for $1, now people are sitting here, they're like, okay, all right, we're deep into this. You know, he's selling something for $1. Are you telling me the most I can make is $1? Yes, you can make $1. If you did one contract of this trade, it's only $100. You go, I can't live off of $100. It costs more than that for a cup of Starbucks in this inflationary environment. Depends on what's, city you live in, but $100 for a cup of Starbucks. I remember years ago traveling around, a lot of years ago, 15 years ago. And I remember one country I went to, we'll call it Singapore. It was like $13 for a cup of coffee. Wasn't a very good cup of coffee either. Anyway, okay, can you imagine inflation over there? Like, I'll be back in a minute. I need to take a mortgage to go get my coffee. Anyway, I sell a 120 call. Now, inevitably, people are going to look at this. They go, whatever, man. I don't even have the margin to do this. And they shut down. Okay. Did I say anything about margin yet? No, I didn't say anything about margin. How about this? I can circumnavigate margin here. You cool with that? So if you're worried about margin, stop it now. Some people that are brand new have no idea about margin requirements. If you sell something naked, you have massive margin requirements. How about I can cure that for you, right? I can sell boatloads of premium and have very, very minimal margin. I can sell boatloads of premium in a $2,000 account and still have very minimal margin, okay? How about we show you that today too? You go, okay, now we're getting somewhere. So just focus on the example. What can happen to me here? Once I put this trade on, I collect $1. Clearly, I could do 10 contracts of this. Instead of it being $100, it's going to be $1,000. But what happens in the trade? Well, the stock could stay flat. If the stock stays flat, do you make money? Yeah, you make $1. If the stock goes anywhere down, I make $1. Okay. If the stock goes up, I could still make $1. If the stock gets to 120, I'll wet myself. The only way you really start to lose money is above 120. Above 120, it starts to eat into the dollar. What if the stock goes from 100 to 130? What do? You go, you're throwing up all over the place. This trade has got like at least a 90% probability, okay, in it. It's an incredibly high probability trade. But again, people look at this and they immediately think, I got to wait all that time to just collect $1. It's not about the dollar, okay? It's about the fact that the trade is what? Incredibly, incredibly high probability. Now, one of the things I want to do right now is I want to get you up to speed on how to do this, right, in the real markets. Like, you can do 90% trades all day long, okay? A monkey can do a 90% trade, all right? But then, you have to sit there after you put on the trade and you're like, I got to sweat, I got to sweat, I got to sweat. Okay. Let's get down to what specifically inflection point trading is really about. Now, as you get into this, okay, you're going to learn to sell options. Okay. And selling options equals positive time decay. When you sell options, every day that passes sees the dwindling of the options premium, meaning a little bit, a little bit, a little bit, a lot of bit, a lot of bit, a lot of bit. As time passes, the options you sold decay exponentially. Let's take a moment to review decay, okay? So theta decay, feel the burn, baby. How many people are familiar with this? Okay, basically what this says, you sell an option that has all this time, it burns very slowly, and the closer you come to expiration, what? The closer you come to expiration, look, okay, the faster the burn, the closer you come to expiration. Is that big enough there? Okay, so the closer you come to expiration, the faster the burn. Yes, everybody's familiar with that? Okay, thumbs up, maybe, because I want to show you something interesting. How about, okay, we can put on a trade, right? How about we can put on a trade and we don't have to sit there and wait for expiration? How about there's a way to make decent amounts of money with very, very small amounts of risk, okay? But you have to learn how to use the right option. And I'm going to say this again, okay? We're going to go out and I'm going to teach you a trade right here, right now. And again, you know, a lot of people, they go to these webcasts like this, and, you know, there's a lot of fluff on it. Ain't no fluff here, okay? I'm going to come in right now. I'm going to show you exactly what option, okay, needs to be sold for inflection point trades. The reason that people come to TheoTrade is we give specifics. The reason people come to TheoTrade is we provide criteria. When I say criteria, that is, we'll get on the screen like we're going to do right now, okay? I'm actually going to show you a trade verbatim that I would do. In fact, I can do right now. I'm going to open up 114-day expiration. Now that is going to just, there's a lot of you guys that have traded options before and you're like, that's just stupid. Why would I want to sell an option that's 114 days out? And they just get all adamant and all crazy. Okay. They're like, I don't want to do that. Okay. Markets changed dramatically in recent years. Specifically, the change came with the onset of COVID. Risk shifted, and what we term skew, and that's volatility skew, okay, shifted dramatically. Let me show you something I think you're going to find interesting. I'm going to open up a 114-day option just to make a point, okay? And I'm actually going to look for an option that has an incredibly high probability of success, okay? And how to find the high probability of success? Like, I'm just not even going to beat around the bush. Look, I go to this probability out of the money. Now, people look at these calculations and thinkorswim like, what kind of a geek? This kind of a geek is the one that came up with models like that. Okay. Again, you know, I'm using thinkorswim, but I use Tastyworks and thinkorswim interchangeably. Most of the time, I actually do analysis now on thinkorswim, but I trade on Tastyworks. I like the trading on Tastyworks. What I want to do in this example, and this is just going to be an example, I want to look, okay, at the ability to, let's do it. Let's sell, okay? And this is going to be a 16th of December, 475 call. What's it trading for? The market's a $1.16, $1.25. So let's put it directly at $1.20. Now I'm going to sell something for $1.20. What's the most I can make? If you sell something for $1.20, what's the most you can make? Anybody? Yes, I'm going to sell something for $1.20. The most I can make is $1.20. I'm selling all the way to the 475s. I mean, that's kind of far out of the money, like it's nosebleed seats. But everybody immediately looks at this and they go, seriously, I'm tuning into a webcast to learn how to sell something 114 days before expiration. You know, in 114 days, Don, okay, I ain't waiting that long to collect 120 bucks for a one lot. Captain One Lot rides again. Like, I'm not going to wait 114 days. Nobody said you had to wait 114 days. But I did tell you that the skew shifted. And what I want to show you is all factors being held equal, what is this option, these 475 calls? So if I sell the D's 475 call, what's that option worth? Exactly 30 days from now. How do I figure that out? I just look at this 114 and I go to the 86. 86 is 14 plus 14. This is exactly 28 days from now. 28 days from now, will I make money? Again, assuming the market was flat. The market's not going to be flat, but just assume the market's flat, because the people's biggest argument about options is options don't decay when they're 114 days out, okay? Yeah, they do, but it's not the kind of decay you think it is. Out of the money options actually decay at an incredibly rapid rate, but the volatility is actually decaying out of them. Okay, it's very different. So if I open up this 86-day option, let's go right to the 475s. Let's not screw around. Let's go to the 475s, 475, 475, 475. There it is, okay, 475s. Okay, so these are the 475s. And all I've really done is fast forwarded 28 days, right? I just went to the 86-day option, went to the 475s. What are they trading for? 55 cents. So 28 days from now, I'm going to turn around and I'm going to buy my 16 of D's 475 call back, and I'm only going to have to pay about 55 cents to be able to get it back. Am I up? Okay. Am I up? Yeah. What am I up? Over 50%. Okay. So you're going to be able to make between 50, okay, to 60% in 28 days, just holding it out of the money option. You go, that's ridiculous. How come more people aren't talking about this? Because more people don't realize this. By the way, this has been going on now for almost 2.5 years. Almost 2.5 years, we've actually seen the decay rates that are phenomenal in the back month expirations. And it has a lot to do with volatility, less to do with what you think. There's nothing, I mean, listen, if the market rallies against me, so be it. I'm not going to just go out and sell one call and hope that it works out, okay? I'm not going to go out and just sell a call and hope it works out. Like, well, all I'm trying to do right now is teach you, okay, categorically speaking, that there's great decay in back month options. Let's take it away from spiders for a second. Let's go over to the QQQ. What's the QQQ? It's the Nasdaq. Could you do the same thing in the Nasdaq? Like, look, let's open up the 114 options. Let's go to something that has like a 90%. Let's get crazy. Here, this is an option trading perfectly at $1. You ready? Okay. This is a, let's just write it up here. 385 call, and it's trading for, let's just put it right at $1. Okay, it's trading for $1, 385 call, and that's the December expiration, whatever. And then open up 86 days from now. Let's go to the same 385 call, 385 call, 385 call. He goes for the 385 call. Where is it? There it is. Okay, and the 385 call, what's it trading for? 47 cents. Okay, so don't tell me, and I can turn around. So this one I sold, and then I'm going to buy it back. That's a B. I'm going to buy back the 385 call, and I'm going to buy it back, for instance, for 47 cents, and I'm going to make between 50, okay, to 60% inside of 28 days. Ridiculous, right? It's ridiculous. And people are sitting there, you know what a lot of people do? They sell short dated options. Selling short dated options, okay, look, I can open up options with 28 days to expiration. I can sell options with 28 days to expiration. What can I make? When I'm way out of the money making 90%, you're like, look, yeah, I can sell something for 60 cents. Okay, and wait 28 days, but I'm going to have to wait a full 28 days to make my 67 cents. What would you rather do? Would you rather sell something way out of the money, like nosebleed seats, way out of the money? You don't have to sweat. Or would you rather sell these 345s and just pray, oh, please stay away from me, market? It's just ridiculous. People do not get the back month options or what you want to sell right now. Okay, and that's the bottom line. So when you do this, okay, and you look at theta, theta's all, this is garbage at this point. Why do I sell options far out in time? Typically traders sell short dated options, but that's why you're tuning into the webcast. Okay, that's what criteria is. That's what we do here at TheoTrade, is we build criteria with specifics, details, right? So there's not a lot of questions coming in over here. It's a quiet group, okay? And again, I want to reiterate something. You can do this all day long. Now, at this point, we haven't talked about hedging. We're going to talk about hedging, because what's going to happen is eventually when you sell options, you're going to find out there's a 90% probability, and then you're going to learn about the 10% hammer. What's the 10% hammer? It's the dark side of the beast. But before I get there, okay, let's talk for a moment. What about margin? How many people here so far are okay and like this? How many people like it so far? Are we getting anywhere? Okay. Yes, no, a Y for yes, an N for no. Okay. I'm just making sure everybody's on the same page. All right. There's good questions coming in. Larry, what's the range of the delta and the long option? We'll get there. Okay. So here's the next question that always comes up. You're like, yeah, I like it, but I don't have the capital in my account to do this because I know that it takes huge margin to sell options like that naked. First of all, I'm not implying that we're just going to sell it naked. I mean, I'm just showing strategizing a little bit around it. But all I want to try to do is create decent monthly income off of longer dated options, right? So I want to go in here and I want to collect like 50, 60% and do it again and do it again and do it again. And I'm not going to screw around. Like, so the one thing I want to point out, and I really, this just really gets to me. People will sell short dated options and they'll wait 30 days for them to expire. And then they'll sell short dated options and they'll wait for it to expire. And then they'll sell 30-day options and they'll wait for it to expire. What's the difference? Look, I can sell options with 114 days. I can wait 30 days. I'm not letting it expire. I'm buying it back. I'm making just as much as you are out here. Why is out here better? For those of you that speak total geek, okay, there's very little what we term gamma risk, okay? The gamma risk, negligible back here. You know what gamma is of these options? Basically zero. Okay. And people go, I don't even know what gamma is. Okay. Gamma is so mean to me. All right. Gamma is basically zero. But if you come into the short dated stuff, okay, gamma going to get big and gamma going to get ugly and gamma going to get scary. Okay. Don't let gamma get you. But when you do this, okay, again, you don't have to use these short dated options where gamma is going to eat you alive. Also, these short dated options force you to sell. Like when you sell shorter dated options, it forces you to sell stuff that's pretty close to where the underlying is trading. Like right now, the spiders are at 412. If I sold these 435s, like what, you think the market can't move up 20, 30 bucks? Of course it can move up 20, 30 bucks. The spiders just moved, let's call it from 380, okay, to 430. Yeah, it's a 50-point move up. Okay, 50-point move up, but I'm way out here in the nosebleed seats. Okay, am I further than $50 out of the money? Right, I'm all the way out at what? Let's get crazy. Let's go to the 475s. I mean, again, I'm $65, $70 out of the money. However, we're going to actually, by the way, yes, we're going to talk about hedging in a moment because the hedge is important. That's the risk reduction portion of it. Before I get there, though, I want you guys to know margin is important. And when you're trading and you want to circumnavigate margin, why don't I just go to my monitor tab? And as I said, everything that we do here at TheoTrade, everything, this is no holds barred approach. Okay. Listen, I don't care whether you like what you see on my screen, what you don't like what you see. This is every product that I've traded year to date. Every product is listed in here. This is thinkorswim. Okay. It's profits and losses. I'm up $101,000. There's just about 300,000 in this account. Okay. I've got another account. It's an IRA. This is a smaller IRA. Okay. It's a smaller IRA in here. And the profit and loss year to date is up 41,000. Okay. Go, how much is in the IRA? As I said, no holds barred approach. Okay. You can't screw with an IRA because some people go, well, you could just add money into your account and make it look like it's up 100 grand. Okay. You can't add money to the IRA, especially when everything on the screen adds up. Right? You can see exactly where I made the money, right? Net lick in here is 74,000. This IRA, okay, is up over 100% in a year-to-date basis. Just a small leftover IRA. Close that up for a second. What I want to show you in here, okay, this is like today. What I want to show you in here, quite simply, is a position that I presently have on, okay? And I'm showing you a position I have on. It's not to be impressive or anything. Okay, the reason I want to show you the position I have on, the margin requirement of this present position, this is a big position. And I am tying up $27,000 in margin. But time out, that's a sizable position. These, okay, are options on futures contracts. And you go, I don't even know what those are. Okay, they trade exactly the same as the SPY. But one SPY contract okay, can be construed as a decent sized trade. Each one of these is worth 5 spider contracts. So you look at this, 5, 10, 15, 20, 25, 35, 45, 40, 45. Did I skip over there? Okay, 5, 10, 15, 20. Sorry, I'm counting over here. 1, 2, 3, 4, 5, 6, 7, 8. There are the equivalency of 40 SPY contracts packed in here with only $27,000 in margin. Okay, that was an easier way to do it. I apologize. I'm trying to count 2 different things in my head at the same time. Each one of these contracts is equivalent, okay, to 5 SPY contracts. So you're looking at the position, you're like, well, I don't even have $27,000. Well, I have an answer for that. This, okay, is actually a smaller account. Here, I'm actually trading options on futures contracts. I'm only tying up $1,168 in margin, okay? That is a very, very light amount. By the way, that is also inside of an IRA, okay? This is my IRA. If this was a regular marginable account, it would only be tying up approximately $600 in buying power, okay? You need only have $2,000 in a margin account to be able to do this. So again, I wanted to cover capital requirement, okay? They make these options on futures, and options on futures have different margin requirements. But you want to know the best part about options on futures? There's no day trading margin requirement. There's nothing like that. Options on futures hold a less margin, but they're the exact same things as trading products like spiders. And I don't want you to feel like this is complicated. It's the same thing as trading the spiders, except it's called the MES. It's the same thing as trading the spiders, except in this case, it's called the ES. Depends on how big you are, okay? You trade these products because they circumnavigate the margin requirements. We trade these products because there is no day trading, okay, margin rule on them. And that stuff's important to me. It's really important to me. Somebody said there's no screen showing, but there's definitely a screen showing, okay? Just making sure over there. All right, so again, I want to make sure that everybody sees this. Everybody does see the screen, right? Just making sure, okay? We're okay to go? Okay to go. All right, so I'm just confirming that you can see the screen here. Yeah, good, thank you. So we use alternative products to circumnavigate margin restrictions. And I'm just making no 2 ways about this. You're looking at this margin requirement, you go $27,000. It's 40 SPY contracts, okay? Some of you may have some experience. Most of you do not belong trading 40 SPY contracts. Most of you don't. I know a lot of people, they tune into webcasts, somebody's like doing 200 contracts, okay? I promise you, I've got more capital in account than most throughout these. I mean, we're trading, upwards, this account, Tastyworks, okay, about 1.8 million in a couple of accounts. But before I even get into that, it's neither here nor there. You trade small, okay, and you live to tell the story. This is about going out there and just generating monthly income day to day. Like that's what this is about. This is not about trying to hit a home run. This is about hitting singles and doubles, consistency. Okay. I want to, just generate monthly income in a marketplace that's, well, chaotic. But you still have to focus on, you're doing these high probability trades. And I think that some people get that high probability trades are great, but 10% of the time, the market just rips your face off. When high probability strategies go awry, you get hammered. And what happens to people in high probability trades is they make money, train wreck, okay? And your losses exceed the gains of like the previous 3 or 4 trades. And I know exactly what people have done. Like if you're listening right now, and how many people here have ever traded an iron condor? Some people have never heard of an iron condor, but how many of you have ever traded an iron condor? Huh? Come on, people, admitting it's the first step today. If you've ever traded an iron condor, for those of you that have no idea what an iron condor even is, okay? They're like, I have no idea. Let me show you the plight of the iron condor. Iron condor is going to look like this, all right? Iron condor, this is the market, okay? That's where the market presently is. You sell here, turn around, buy here. okay? And you sell here and turn around, buy here. This is calls. This is calls. This is puts. This is puts. So for the most part, if the market stays inside that range, you're going to make money. And I'll tell you what, people go and they take a class for, oh yeah, for $500, you too can learn to trade iron condors. And what happens to you is the first time you do the trade, you make money. You did a 1 lot in the SPY, trade has a 90% probability you make money. The next time you do the trade, you do a 5 lot in the SPY, okay, has a 90% probability and you make money. The third trade, you actually step up and you do a 1 lot in the SPX. Why are you doing a 1 lot in the SPX? Because you're unstoppable. Anyway, you do a 1 lot in the SPX, has a 90% probability and you make money, okay? And by here, you've had 1, 2, 3 trades go your direction. You're starting to feel invincible, baby. Okay, I am invincible and I'm unstoppable. So then the marketplace goes, come on, come on, come. And you do a 10 lot in the SPX and the market goes, bam! Okay, and the next thing you know, the 10 lot in the SPX, just so everybody's aware, 10 contracts in the SPX is the same as 100 contracts in the SPY. So market baited you. In month 1, you traded 1 lot in the SPY. In month 2, you traded 5 lot in the SPY. By month 3, you're trading basically the equivalency of 10 contracts to spiders. By month 4, you think you're Warren Buffett. You're doing 100 lots, to SPY. And in month 4, the market goes completely awry and literally wipes out 50% of your account. It doesn't just take some of the profitability that you had, it wipes out, it's a train wreck, okay, you get killed. And people they look at this and whenever I talk about this, they're like, holy crap, it's like you could see my account. Really, I could see your account, okay? I spent 15 years behind a screen where I could see everybody's account. You know what we used to do at TD Ameritrade, specifically at TD Ameritrade, at thinkorswim, we knew how to look at client accounts and we knew what to assess in client accounts. But TD Ameritrade took us to whole new levels because TD Ameritrade, we had this group at TD Ameritrade, we called them the nerdery. And the nerdery was, well, it's a group of nerds. It was like a group of actuaries and so forth. You can ask them questions. You can say, hey, okay, individuals of the nerdery, if somebody traded an iron condor, okay, what did it look like after 5 months, 10 months, 15 months? And we could see the same pattern again and again and again. Made money, made money, made money, made money, wiped out 50% of the account every single time. So we're like, great, that's something we won't be teaching. Okay. And we went through umpteen different strategies. So, okay, by the way, after you do the iron condor, it gets even worse. Then you come in here and you go, yeah, well, I do iron condors. Okay. I like this. Somebody just said, I made $23,000 in a couple of months, then lost 18,000 in 1 month. It's the plight of the iron condor. By the way, you're lucky in that one. Most people lost, half their account in an iron condor trade. Then people after they lose in an iron condor, they're like, I can't believe it happened. 1 in a million shot. So they go and they take another class for $500 and they say, I'm gonna fix this thing. Fix is a really dirty word. Okay. So if you're going to fix a trade, you just get out a shovel and just keep digging, because fixing a trade implies more risk in an already losing trade. You got to learn that bad trades, you got to throw them out like yesterday's trash. If you take a car and drive it off a cliff, do you bring it to a body shop? Okay. You take a car, drive it off a cliff. Do you bring it to a body shop? You go, of course not. That's ridiculous. Okay. They would tell you it's a piece of crap. It's totaled. I'm going to say the same thing about your trade. Okay. Listen, the problem with most people is they don't understand, okay? They need a hedge. You can't survive without some risk mitigation tactic. When you drive a car, do you have a hedge in the car? Of course you do. What's your hedge in the car? Insurance, okay? You can do everything right in that car, okay? But there's still, how do I say this eloquently? Idiots on the road. And I say that as eloquently as I can. Things can still go awry. There's nothing you're going to be able to do to control the marketplace. One day you're going to wake up and the marketplace is going to be a slaughter fest. Listen, we need a hedge in order to sell premium. It's the cost of doing business. And some people don't like the idea of hedging in the marketplace. If you don't like the idea of hedging in the marketplace, get out. I don't want to be so blatant, but Listen, you can't operate without some degree of hedge right now. Selling naked puts with no hedge, and again, you came into this world trading naked, okay? But now you're going to need a hedge. We're in chaos, Phil, right? You've always needed a hedge in trading, but you can't predict what's going to happen the remainder of this week. I mean, the remainder of this week, you got GDP tomorrow morning. That's going to be exciting. But push that aside. You got Jerome Powell, okay, out of Jackson Hole, Wyoming, one of the most expensive places to live in the entire world. It's a great place for the Fed to actually, host a meeting about, fiscal responsibility and raising interest rates in the most expensive zip code in the United States. Anyway, we got to talk about a hedge because, no one questions the naked pig until he's served up for dinner. Listen, we need definitive downside protection in order to be able to sell premium. Okay. The cost of the hedge has to be reasonable, and it has to be reasonable even in the midst of volatility. So what am I saying? Okay. Insurance can be expensive, but we're going to make sure that it's not, okay, and that it's worth buying the insurance to be able to hedge the premium that we're selling. Okay, that's the environment that we presently live in. And let me show you exactly how this is going to work. The first thing that I want to elaborate on for you, okay, I'm not here. This is a stock, and let's say the stock is trading at $100. Okay, stock. You know what? I'm not even going to make this a fictitious example. Let's just go right to the spiders. Let's make an even better point. So here's the SPY. Okay, you ready? SPY is trading at 413. Here, we'll just put this at 413. It works. So we're going to look at the SPY. SPY is trading at 413. I'm going to go and I'm going to sell, for instance, what was that? 475 call. For that, I'm going to collect $1. Before you know it, though, I'm also probably going to sell a 480 call. Maybe I'll collect $1 from that. Simultaneously, I might be out there selling. Let's get crazy. Let's sell a 320 put. By the way, the puts, oh, that's going to be trading for at least $2. It's going to be huge. Okay. Then I'm going to turn around and sell a 310 put. The 310 put might be trading for like $1.50. By the way, I don't mind. Okay. I'll just jump over here to the live platform and show you in terms of pricing. Is this realistic? Is it realistic? Let's go all the way out to the 320 puts. What are the 320 puts trading? Okay, look at that. 320 puts trading for even more. I told you they were trading for $2. They're trading for $2.50. Okay. I mean, there's so much premium out there. So you look at this, and all I'm going to do is I'm going to layer on a couple of these little trades. I'm just going to layer in a few trades. Don't let this intimidate you. But the real problem is this. One day you're going to wake up, the market's either going to rally huge or sell off huge. Okay. And you can't operate in that environment without a hedge. You can't, okay, operate in this environment without a hedge, because if the market crashes and burns, you're dead. Right. And the real risk, the biggest risk, what if you wake up and we're down here? Okay. And the markets fall apart. We need, okay, to develop a hedging strategy, and we have one. This is what inflection point trading is about. Okay. And I'm actually going to teach this. Enter the hedges, enter the dragon. All right. So SPY, okay. SPY is trading at 413. It's right here. So I'm just going to focus for a moment. Again, I can definitely sell premium on both sides of the market, and I want to sell premium on both sides of the market. But we want to focus for a moment right here. So I'm going to go out and I'm going to sell the these 320 puts, okay? And I'm going to sell them, let's call for $2. All right, so I've sold the 320 puts. What's the risk? Now, for those of you that are brand new, you're like, I don't even understand puts. You explain calls. Selling a put is really no different. I'm selling myself into an obligation. I'm obligated to buy somebody else's stock at 320. Do I own stock? No, but I'm going to be obligated to buy their stock. The intent of selling the 320 put is I don't really want to buy the stock, but I'm selling the put because I want to collect $2. Okay. But the problem is we could actually crash and burn. If we crash and burn, I'm a dead man. Like, do you have any idea this put that's trading for $2 could explode in value? I mean, that put that's trading for $2 could be trading for $20. So enter the hedge. And this is what we call, okay, inflection point trading, okay, IPT, inflection point trading. I'm going to use what is termed, okay, an inside hedge. And delete everything for a second, okay? So you know that you've sold out here. And again, I sell that 320 put and collect about $2 on it. My inside hedge is going to sit right here. And by that inside hedge, yes, you actually, what? You went out and sold this for $2. The inside hedge, which is the inflection point, okay, hedge. That inflection point hedge, what it basically does is it sits, when I say inside, and if the market, which is sitting at 413, okay, comes crashing down, it has to hit the hedge, okay, before you could ever take a loss on the put that you sold. And if you look at this, right, the market, right, that you are involved in is these 320s. That is what? I mean, you're 15 or 20% out of the money. Okay. Markets overnight can only sell off by a max of approximately 7%. Even in a crash situation, you're going to hit the inflection point ever before taking any hideous losses. And people look at this for the first time, they're like, it's interesting, but how does it look in terms of a risk graph? You want to see it in a risk graph? Okay. Seriously, you guys want to see this? Because people look at it and they go, oh, is the cost of the hedge reasonable? How about if I show you a live trade? Because that is a live trade, right? This is one I actually have on right now in terms of the SPY. Okay. And I want you to see, does the trade have risk? It does have risk. And by the way, the trade that I'm showing you right now, this is on, this is real. Okay. When I say it's real, here, and go to my monitor tab. Go to my monitor tab, open up my SPY positions. You're going to see how real it is. It's a 7 lot against a 10 lot. Okay. What basically happens in this particular position is this is where the market is presently trading. Let me change the color here. This is where the market's trading. For me to take a loss, I have to take a gain first, right? So for me to take a loss, I have to take a gain first. Can I lose money? Yes, I can lose money under about 360. How far is that down? Okay. How far is that down? The market would have to sell off exactly 13%. Okay. We'd have to sell off by 13% for me to even start taking a loss. And I'm going to tell you right now, okay, hedges are designed to mitigate risk. They're not going to wipe all risk away. Could I take a loss? This is a huge position. You don't think of a 10 lot in the SPY as a huge position. Huge position. In a market crash situation, you're like, I'm in trouble. Okay. The hedge, though, is, okay, verifiable. You can see it. You have all of this room from here to here to be able to get out, right? Even if you fell asleep at the wheel, you could even use what we term GTC, which is good till canceled orders, to be able to get out of this trade, okay? I'm just showing you right now one side of the market. Obviously, you could do this on the other side, but do you realize if the market rallies, I have nothing but profitability. It's not making a ton of money, but I have nothing but profitability if the market rallies. And if the market sells off, I actually benefit from a market sell-off before I could ever take a dramatic loss, okay? This is all, okay, placed as one trade. It's all placed as one trade. And the first time people see it, they don't get it, okay? They don't get that you could go out and you could actually create a multitude of these trades, right? And it's not very difficult. You could sell here and sell here and sell here and sell here. You could even do it up here. And you go, what does that look like? What does it look like when it's all said and done? I'm going to show you exactly what it looks like. Just come right over here. As I said, no holds barred on here at TheoTrade. Looks like this. Look, I have a call, another call. There's a put. There's a call. There's another put. There's actually a hedge in place. Okay, the trade is producing about $115 a day of decay. So what don't you like in here? Okay, what's not to like? There's negligible directional risk in the trade. All I'm doing is selling premium. Okay, and people, okay, I'm mitigating my exposure. But I wanted to show you this, and it's, I don't often get into the risk graph and so forth, but I want you to know, okay, Look how much degrees of profitability there are in here. Markets could sell off, okay, by 13%, and you're still, okay, in a profitability window, okay? You're still in a profitability window. And I know everybody, Larry just came in here, said, where is it placed? Well, the product that you use dependent upon your margin, but timing is not critical in here either. I mean, timing is just, it's not going to be part of the strategy. So when people look at this, and somebody just came in and said, too confusing for me. How about this? If I sent out this trade, you think you could copy it? Serious, right? Because this is where, and I'm gonna be very forthright. You're gonna have to spend some time. You're gonna have to learn how to do this. But if I sent out that trade, okay, and hit copy, and I posted that trade right in there and sent it out to you, you think you could figure it out? If you watched a couple hours in a class, think you could figure it out? Because right now, you just don't stand a chance in this marketplace trying to time it. Okay, you're going to have stuff like this to survive the marketplace. Okay, I mean, people are going to have to make some decisions as to what they do in their livelihood in this business. Okay, and if you can't get by anymore buying or selling just a call option or buying or selling a put option without some type of strategy. In this case, it's inflection point trading. There's no reason for people to be in the business right now. Okay, directional bias is out the window, and that's what people are used to. Listen, this is why you want to use inflection point trades. Okay, you're going to need this for the foreseeable future. You're just going to need it. By the way, do you place one additional hedge for each position you put on? No, I'm going to get to that. Okay, one hedge can actually incorporate up to four premium sales. Pretty good. Okay, VIX hedges are not going to work right now. VIX is too high. So this is why you want to use inflection point trades. You can sell premium now in a small account. By the way, I want to make something very, very clear. $5,000 account would be an IRA. In a regular margin account, you only need $2,000. Okay. So in a regular margin account, you only need $2,000 in a margin account. This produces positive theta decay. You can actually enhance existing positions. You can use the inflection point against stocks that you own. Okay, provides an incredibly high probability of success. You do realize that most of the time, you don't ever use the hedges. The hedges are there as a blanket. Okay, and I'm going to tell you right now, whatever business you're in, you probably have to have some type of insurance, some type of cost of doing business. In the inflection point spread, it's the cost of doing business right now in a volatile market. You're never going to need to buy or sell the stock. You can be wrong in market direction and still produce profitable trades. Did you hear me mention anything about, directional bias? Of course not. And by the way, I'm going to show you 18 months of results from this. All right. You can be wrong market direction. And I'm just saying, you need this in your life. Now, I've traded this through 2021, which was wildly bullish. Okay. Wildly bullish in 2021. Still worked in a bull market. People say, how did you do this year? This year has been phenomenal. It's grand slam home run. Okay. Why? Volatility is through the roof. The more volatility, bring the pain, people. Inflection point trades, potentially bring in consistent returns while mitigating your risk. I want to learn to do this the right way. We're going to discuss criteria. Before I discuss criteria is all the nuances. Criteria is, when do I place the hedge? How many hedges do I need versus how many puts can I sell? What do I do on the call side of this thing? Okay. Before I get there, here's live trading examples. And I was serious when I said a moment ago, okay, I was pointing out, somebody's like, it's a little complicated for me. We provide trade alerts, and we do it because, here's the bottom line. When I say we provide trade alerts, that's what this portfolio is. This portfolio that you're looking at right here, this MES, this is what we term the Theo Theta small portfolio. Okay. It's Theo as in TheoTrade, Theta as in time decay. It's the Theo Theta small. Okay. Small means, MES. These are super, super small trades that tie up nominal margin, but you got to hold somebody's hand. Okay. I'm very forthright in saying, even when I, first got involved in the business, everybody, has to come up different ways. We think that the best way to come up is watch a class and then obviously, Now watch examples. So variations of all of the following trades can be done with as little as $2,000 in a funded brokerage account and can be done inside of an IRA account, okay? Just to point out, these are alerts. Alerts, what does alert mean? It means trades that we've actually sent out, okay? We send out trades to clientele. Why? So that you can copy them, okay? There's no question, like we want you to be able to execute on your own behalf. But at the same time, like to me, it's ridiculous when somebody just goes out and teaches a class. They teach a class and they go, that's it, bye-bye, I love you, bye-bye, figure it out yourself. Why do that? If these trades are good, send them out to the masses, okay? Why wouldn't you send them out to the masses? It makes no sense not to send them out to the masses. Just to give you an idea, like when we send out trades now, okay? We send out trades, thousands of contracts are done. Like if you look at Goldman Sachs, I have a trade on Goldman Sachs right now, okay? And if I look at volume and open interest, just to make a quick point, okay? Look at the open interest in here. Did you notice anything interesting in there? I just want to make a point because people say, well, how many people are doing your trades? Look, okay? This one's been on for a while. There's almost 2,000 contracts open. Who is that? That's us. In the small portfolio, when I say the small portfolio, we have this Theo Theta small portfolio. A lot of the times we trade the MES, okay? This is for the newest of the new clients, okay? Do the newest of the new clients trade? And the answer is yes, they do. How many do they trade? Watch, we're gonna open up the open interest in here, okay? Look, there's 1,000. Did you notice anything in here? Okay, we are very, very large. We have 6,000 active clientele right now at TheoTrade, but you can see, all right, we have 1.26 thousand contracts just on that strike, all right? And if you want to look and you can see, well, what other options do you have on in here? All right, I have the 3690 puts. Okay, want to go look at the 3690 puts? Let's see how many contracts are in that one, just to make a quick point. All right, oh, look, 3690 puts, only 557 of those. Okay, why so little of those? Because we don't have that many hedges on. Okay, the hedge is on, right? Here's part of our hedge. There's 500 contracts open to the hedge. So you can actually see my hedge as well. We are, okay, no holds barred, and we show everything. So these are trading alerts. Now, Tesla, 58% return, okay? The screen that you're looking at right now, let me just display to you. Here's the opening position, the closing position, the time, the date, everything, okay? I'm just showing you 18 months, then I'll just show you live, okay? I'm just gonna scroll through here real quick, okay? Because there's now, like, look, I started on slide like 35. I'm just scrolling through and showing you returns. This is every trade. This is not, cherry picking. Look, there's some losses in here. This is every trade that I've done in the Theo Theta portfolio, okay, for the last 18 months. And I'm just scrolling, just opening and closing bonds, IWM, okay, Tesla, Amazon, okay, SPY. And then once we get a little bit, more comfortable with the product, I started trading ES. ES is actually a much bigger contract. This is 5 times the size of SPY. Okay, then once people are a little bit more comfortable, we'll start to mix in some more complexity. Okay, we do things like Christmas tree trades in here. Okay, and I'm just scrolling through and showing you consistency. Another Christmas tree trade. These are a little different, 92% return. Okay, everything you see is almost a 50% return. You go, that's uncanny. He's got like an incredible track record. Of course, the trades that I'm doing are all like 90, 95%. Frankly, we just haven't really been threatened in a very long time. When I say threatened, we haven't had a trade go wildly awry since early 2021. Even with this most recent rally, nothing really caught us. Okay, here's again, we're all the way into what, 2022, we're in May of 2022 now, okay? And again, after May of 22, you go, what happened? I'll show you exactly what happened. If you wanna see after that, here. After May of 22, okay, here you go. These are open and closed trades. Open trades and closed trades. Let me refresh the screen. So we can show you everything. Apparently I have not logged in over here. Bear with me as I actually take you into TheoTrade, okay? I'm gonna get into TheoTrade now. Bear with me as I actually log out and log back in because I need to log back in. would help if I had logged in. It's been a while since. I do apologize. When I say it's been a while, it's been about 3 or 4 hours, so it automatically logged me out. All right, we're back, baby. Okay, we are back. So I'm logging into TheoTrade right now. Okay, and I'm just going to take you into some specific portfolios. So there's different portfolios. The one you're looking right now is the Ultima, okay, to TheoTheta portfolio. And what that TheoTheta portfolio happens to be, it's nothing more than open trades and closed trades. Okay, open. This is obviously one that I opened a few days ago. And then you can see every single closed trade, right? And you guys can go back through it. And again, I ended, I was saying I ended on this one here in the ES short put on 517, okay? But the portfolio doesn't end there, all right? I'll show you 517, but look at all the trades. These are all closed trades, okay, after that, all right? Every single trade that I've updated on. These trades can also be copied, just so you guys see. You can take the trade, you can copy the trade, and that trade can be placed just by copying it. All right, you can actually put these trades directly into the clipboard, meaning that, apologize, I already had an order in here, but you can actually copy and paste trades directly from your clipboard right back into the trading applications. That's what it's designed for, okay? And again, the track record, you get to see it. It speaks for itself. As I said, just no holds barred approach. And I want everybody to be able to see every transaction that I've done. Here's my activity. This is just an IRA account. And you can take a look at the activity. This is just the last 30 days, all the activity. You can look back at 60 days. Okay, you can look back at 120 days. It's every single trade that I've done in the account. Profit, loss. Again, I have a very, very, open approach to the fact that I want people to be able to see every trade. Okay, I mean, the greatest thing about this, and again, it looks like gibberish when I, scroll through it really fast. Okay, that's not the intent. The intent is so that you can see every single move that we make. Okay, everything. Like if you don't have a lot of time, listen, we're texting these trades out. We're texting the trades out. We're sending the trades via here. We do push notification. So if you don't have text messaging and you're out of the United States, okay, we do push notification. We have our own app. So even a fraction of a time is enough to see like some serious results, okay? The biggest thing I want people to realize is it's what you need for a challenging market. Like, okay, you can't survive volatility. You want to thrive in the chaos, right? You got to use inflection point spreads to not only just offset inflationary risks, but inflationary risks, okay, it works. Like inflation actually helps. By the way, somebody was asking about a losing trade. I'm going to talk a little bit about that as we go along. You got to get on the right side of the marketplace though and learn a skill set. It's going to take you a lot further than just trying to what's going up and what's going down. I don't mind if people still do that, okay? But at a time like this, there has got to be degrees of consistency. And that is, I don't care what you think, what you know, or what you think you know. The bottom line is forget about a bull and bear market. You're going to be in some chaos. You're going to be in volatility for a considerable period of time. As such, you got to learn something. Okay. Here, what our members are saying, TheoTrade is the best by far. Be with them for the rest of my trading career. No questions asked. This one says, I think there are many people here that make the cost of TheoTrade annual membership nearly every trading day. That's like a 251 to return. Okay. This one comes from Thomas. I'm up 80K since January of 2022. I'm short, okay, having hold my nose during market rallies. Okay, I'm just rolling puts down. I just wanted to show you a couple little smatterings. Listen, characteristics of inflection point trading, all right? So you never have to buy or sell the stock. The risk is tailored to your comfort level. The more experienced you become, you can open up the hedge a little bit. When I say the more experienced you become, because somebody was asking about like the losing trade, that's partially on what risk you can take, right? And what you can actually stomach. The cool thing about inflection point trading, okay, is inflection point trading, it is very, very, very cut and dry. Tell you exactly how to get in, exactly when to get out. Okay, when you do have a losing trade, all right, we're going to pull the ripcord, but we're never going to use a stop order. Okay, you can vary time frames, minimize your risk. The probability of profitability is high. It's the perfect strategy to enhance one's stock portfolio. Okay, it's really, this is an entirely a tool just to be able to build a portfolio. I mean, that's what it's designed for. And of course, we already talked a little bit about options on futures, because then you can actually trade in any account size. There's no excuse. I have a $2,000 account, I can't do it. You can't. Like, there's no excuse anymore. Okay. The other aspect is some people are like, too confusing. I got it. Okay. I got it. Let us hold your hand. Okay, for a couple of days. Just let us hold your hand for a couple of days, a few classes. You know, if it takes, you know, people, again, if it's a little bit confusing the first time through, and I actually appreciate that. The way I don't, when somebody said, too confusing for me, man, I get it. Okay, that's why we built this whole start here menu, where we go options 101, options 201. You're like, I know that stuff. Okay, but then you're ready to step forward. But you do have to put in a little bit of time. All right. I mean, I know everybody. Okay. I know that everybody wants that like instant coffee and instant tea, but you know, this is, you know, trading does take a little time. It's not like, you know, you have to take like a university course that costs $42,000 a semester right now. Wait, school is free. But the point that I'm trying to make with this is you do have to learn a little bit. Okay. So don't let the options portion of it intimidate you. You could do this minimal credits, minimal risk. But the sale of premium, it's this big power saw. You got to learn to use the power saw correctly. You lop off a couple of fingers. Listen, anybody in here can actually sell inflection point spreads. As I said, don't let the options portion of this intimidate you, because you know you're going to need strategies like this for the foreseeable future. I wish I could say otherwise, but you come up with an alternative and I am all ears. But if you tell me that you're going to be able to predict anything in this marketplace, I'll throw it out the window. We have no idea what's midterm elections going to look like. So you compound, we're coming into September, which is, by the way, historically the most volatile month. We got Jackson Hole, we have September, we have elections coming, we have inflation, we have geopolitical risks. Oh my, okay. You give me another risk out there. The risks are just compounding, and that risk is being sold. I mean, that's what selling options premium really is. It's selling those risks. Okay. And again, that's, you know, what we do here, okay, is not about just here's a strategy. Okay. TheoTrade is about a recipe for every strategy, including inflection point trading. You know, you wouldn't bake a cake without a recipe. So why do people trade without one? Here's what you need to know to successfully trade, okay, inflection point spreads for a living, right? What do you have to understand? Stocks or indices make the best inflection point candidates. So what stocks or indices? I already told you, like spiders, S&P options and futures. Those are great candidates, okay? But I don't want to discount, you know, the ability, like, can you trade some Tesla? Sure, but you have to know what volatility you should seek out. You can't run out and just do an inflection point spread because you saw a webinar over here. You got to dial in the right volatility. Too much volatility. Boy, what's too much volatility? You want to see too much volatility? Okay, go out here. Don't be a meme stalker, right? This is you know, death to the trader. You know, there's, by the way, I show people this all the time. Okay, having made markets for years myself, and I grew up around market makers. Okay, I can tell you, this is like death to the traders. 381% implied volatility. There's nothing you're going to do in here that's actually going to come out well for you. Too much volatility, you're dead. Too little volatility, and you're dead. What options expiration do I select? Somebody just came in. Do I buy the hedge 114 days out? Nope. The hedge is actually done in a completely different expiration cycle. You know, what happens when the hedge runs out? You re-up the hedge. Okay, that happens. All right. What should be the delta of the option I sell? What should be the options that I buy against my position? That is, where is the hedge? The hedge, not only is the hedge have to be bought short duration, you need short duration options for the hedge. Why do you want short duration options for the hedge? Because short duration options are more volatile. They have more gamma risk. Inflection point trading, okay? Inflection point trading is all about trading long duration against short duration options, okay? And in doing so, there is an inflection point there. And again, that's what, you know, if you look at this slide deck and you see this risk graph, okay, that is the inflection point. That's what, okay, we're talking about. It's the inflection point between short duration and long duration, okay? How do I build the position? Like, when you say build the position, how many hedges do I need versus how many options can I sell? Okay. Do I need a large amount of capital in my account to do this? Not at all. $2,000 and you can sell premium. What's the right amount of risk for you? we actually, okay, within a class, go through and we detail how much risk you can take versus account size. What are the percentage returns supposed to be? Okay, that we cover. If you looked at the at all the trades that I showed you, and all the trades I showed you, the most frequent return is 50%. Okay, how do I protect myself from market crashes? Market crashes are going to happen. They're going to happen. The inflection point spread, okay, has an embedded 13%, okay, approximately 13% leeway before you start losing money. Meaning the market can crash as much as 13% before you start taking dramatic hits to the downside. Please note that in recent times, okay, that would be a one-day move. You know, if the market moved down 7% one day and moved down another 7% next day, you'd start taking some losses, but you'd have 2 days in which to just say, that's it, I'm done, pull the ripcord. And we discussed that inside of the course. Let me show you exactly what we do here at TheoTrade. TheoTrade creates recipes in trading. Okay, trading's about answering the what ifs. What might be a good stock or ETF candidate? What's the correct options expiration cycle? You know, how much capital do I commit to generating premium? What's the strike options you sell? How many options do I buy? Can I limit my risk? We build recipes, okay, with definitive criteria. What criteria is? It's checklists. Okay, it's the same idea as if, you know, if you're a pilot. If you're a pilot, no one hops behind, you know, a stick in a 737 and goes, throttle up, we're ready to go, baby. They sit there with a checklist. Okay, the checklists now are predominantly on iPads, but they sit there with a checklist and they literally go like, oh, step 1, does this thing work? Step 2, okay, we build checklists, and the checklists are not only about getting in to the inflection point trade, okay, but then they're in-flight checklists. Okay, once you're into a trade, what do? Once you're into a trade, what happens if my hedge is running out? Okay, what happens if we're coming to expiration? There's a dividend payable. What happens if the market crashes? What happens if we rally huge? What if? Okay, name a variable. Name a variable. And it's covered inside of the checklist. That's the entire idea of what we do here at TheoTrade. Just years of watching this. So I watched this at thinkorswim. I watched this at TD Ameritrade. People teach all kinds of strategies. It's an iron condor. Do they teach you which iron condor? What expiration cycle? Okay, what do you do if the trade goes awry? Like literally every single step. There can't be anything left to chance, right? I mean, this is trading. It's your capital at risk. We have the answers to the questions. We'll give you the right probability. We'll give you the right option contracts for the account size. We'll give you, when do I close my premium sell? What if we sell off big? Do I bail out of the trade? What if we rally massively? Can I fix a losing position? People, it's the how, it's the when, it's the why, it's at what price. And I'm telling you, it's just the beginning, literally just the beginning of the variables that you are going to face, okay, while trading inflection point spreads for a living. Okay, you can read what inflection point spreads are. You can read, I mean, you could Google right now. You could Google right now, selling premium. 10,000 pages will come up about selling options premium, maybe even how to build a few trades, but you're going to need TheoTrade's recipe for success. Okay, I mean, I go into quite some detail here about inflection point trading. Okay, but this is based on 20 plus years trading experience. By the way, that's just me. So I started trading in 98. Here we are in 2022. I'm actually 24 years in. I had access to client order flow for 15 years. That's just me. Okay, we also have another crew of 7 other full-time instructors, okay, that help go through and actually generate the criteria. And I ran education for 15 years at a firm with the largest option order flow. You're going to learn right now that criteria is your recipe for success. The following strategy and the corresponding criteria for inflection point trading, we spent years fine-tuning the criteria, the setup, the approach. So when you get to the section on criteria, you simply follow the steps to build a trade, okay? We built a full 4-hour course on inflection point trading system, okay? And before anybody looks at this, they go, oh, great, it's another class for $500. Time out for a second, because that's not what we do here at TheoTrade. And I want to differentiate right now. So I spent a lot of time on the brokerage side of the business. And I built an education firm on the brokerage side of both thinkorswim and TD Ameritrade. Some of you have, to this day, are still watching education courses, okay, that I put together for both thinkorswim, TD Ameritrade. I mean, again, the entire education division, okay, reported through me, 768 individuals, okay, were in that organization at one point in time prior to leaving. And all of that is, based on education. But here, we're not under the regulatory, okay, authority. Here, we can actually get into the finite details and much more granular. And that's what these classes are about. But let me explain a little bit about TheoTrade. We take a very different approach here at TheoTrade. Over 15 years of me in the brokerage side of the business, I've seen all these people that sell a class, and they sell a class for $500, and then you buy an indicator for $500 that goes with the class for $500. Before you know it, these are obsolete. You got to buy another class for $500. That's not what we do. And I just want to make this clear. People are going to hear whatever they want to hear, but I want to make this clear because this is where, like, oh no, here's the pitch. No pitch. Okay. TheoTrade is all encompassing. Okay. We give you classes, right? Right? So classes, not just classes. We give you access to every class that we've done. We give you access to live trading. Okay. So we do live trade. We give you access to email. What's that mean? You want to email me? Email me. And I don't mean like it's a Don assistant. Everybody always asks that. Am I getting a Don assistant? No. I answer, 3-4 hours of emails every single day. It's just the lifeblood of what we do. By the way, I wouldn't know any different. Okay. Since I was at thinkorswim and TD Ameritrade, people have emailed me over the years. Okay. We email. By the way, you can ask direct trade related questions in the email. Why would you want to do that? Don't you think it's worthwhile? If you're going to have if you're going to put on a trade, maybe bounce an idea off of us first. Okay. How hard is it for me to answer the email? I'll answer the email as honestly as I possibly can too. I'll be like, that is the worst damn trade I've ever seen. I don't mind saying that to people. Okay. You can put us on the spot too. Listen, all of us here, okay, at TheoTrade have a minimum of 15 years experience. Some of us come from market making, hedge fund, okay? I actually come from a market making background. Then obviously I was in a registered investment advisor and managed $400 million early on in my career, okay? Then obviously I was with TD Ameritrade and thinkorswim for the better part of about 15 years before we launched TheoTrade, okay? I've actually held everything from a Series 3, which is a futures license, a Series 4, which is a principal option, Series 7, which is a broker dealer. I had my Series 24, which is a principal broker dealer. I had my Series 66, which is a 63 and a 65 combined. I know how to answer an email. Okay. So we give you classes, email. Okay. We have a live trading room, but we also do, okay, alerts. And I'm actually going to take you through this. All of this is incorporated. And today it's $297. How long? 3 months. You get access to everything for 3 months. After 3 months, if you want to do it again, it's $297. I don't mind saying that. And again, this just no holds barred. It's not $500. It's $297. Okay. If you had to ask me one question over the next, and again, 3 months. Okay. You email me one time. I bet you I'll save you more than $300. We do this. And again, we have 6,000 clientele presently on the platform. We don't do memberships. It's $297. Somebody's already asking what happens after 3 months. If you want to do it again, you pay $297. Listen, the class, it's archived already. We give you access to TheoTrade Mobile. You don't pay any more for that. Okay. There's no like additional fee here, a little bit there, a little bit here. Okay. It's just like, I know everybody's looking for like an angle and a gimmick. And I'm even going to tell you, there's a money back guarantee on it. Okay. So let me get through a little bit about what inflection point trading is. Okay. And then I'll get to like all the little nuances of TheoTrade, and I'll answer all the questions in here. The class slide deck that has all the entry and exit criteria, it's available immediately for download. So I'm going to take you back for just 1 second. This is TheoTrade. Okay, this is a start here menu. I'll mention that in a moment. But what you guys are interested in the archives, if I go to the class archive, I'll open this in a new tab. But if I go to the class archive, okay, and just under option classes, by the way, you're looking at all these classes. You're like, oh my God, look at all the classes. By the way, look at all the classes. You get access to all of these today. right? Go over here to inflection point trading, right? Once you click on inflection point trading, you're watching a live class right now, okay? It's on, okay? And again, everything is explained, every detail is explained, but the slide deck is right here. And by the way, this class is not only broken into 3 parts, then I actually show you an entire Q&A, right? Which your questions are probably other people's questions. Then if that's not enough, email me, okay? That's the class. Again, it's $297 for 3 months. And I'll explain what that means here in a moment. Here's the curriculum. You're going to learn to sell premium and hedge in one transaction. You're going to create a high probability position to generate monthly returns regardless of account size, okay? You're going to learn how to hedge existing positions, even the most extreme environments. Okay. The critical aspect of the class is the criteria. It gives you detailed criteria for inflection point, trading and keeping risk at a minimum. You're also going to learn how to analyze inflection point trading so that you can actually compile a multitude of trades and you're never going to be caught off guard by risk. Okay. And you're going to find how many inflection point spreads you can allocate for any account size. We'll say $2,000 account, don't do more than X. $5,000 account, $10,000 account, all the way up to like $1 million. So by all means, as I said, there's also a money back guarantee. And we do this because I just tell everybody right now, it's $297 for 3 months. At any point in the next 3 months, if you don't love it, okay, get your money back. It's only $297. I don't care. Okay. There's 6,000 people that are on TheoTrade. I just showed you the contract size. We don't do a trade now, okay, that's less than a few hundred contracts, meaning that when I send out a trade, okay, those that want to do the trade, right, we do hundreds and hundreds of contracts every trade that we send out. Some of the more simple trades, okay, there may be as many as 4,000 or 5,000 contracts that are traded at any one time. But again, I got to reiterate, we want people that want to be here. We want people that want to be here. We don't want anybody to ever come to TheoTrade and say like, I want you to think to yourself, it's the best $297 I ever spent. And I'm serious about that. At any time in the next 90 days, if you don't love it, don't call us, okay? Just email us. Just email us and say, not for me, here, we'll give you $297 back. It's that easy, okay? There's no if, and, or, but about it. There's no excuses, no questions. There's no commentary needed. Just email us, get your money back, okay? You can go right now to enroll for it. It's TheoTrade.com/IPT. I as in igloo, okay? P as in Pete, T as in Tom. So it's TheoTrade.com/IPT. And again, I'll take you over to that because there's one aspect that I do want you to see in here, okay? As you actually come onto that page, and again, I'm actually showing you the page, TheoTrade.com/IKRITP. So inflection, okay, I apologize in there. IPT, I got it right. All right, inflection point trading. As you come in there and enroll for it, when you click add to cart, there's one really important aspect, okay, that I always overlook. Your phone number. Your phone number automatically enrolls you for text alerts. We're not going to text you like 10 times a day, I promise. What usually happens is you hear nothing for like 7 days, and all of a sudden there's like 3 texts because we trade on market environment. Okay, like earlier this week on Monday we were rocking. I fired, 4 or 5 trades in a 24-hour period. That's all you have to do. Then I sit quiet for a couple of days, wait for the next move, jump on it. Okay, that move on Monday was gold, Jerry. It was gold because the volatility finally took off. The VIX got to 24 and it was good. So put the phone number in when you're enrolling. The other thing is it's $297. You can do, 2 payments of $149, 3 payments of $100. We don't care. Okay, but there's a money back guarantee on it. So just know that. Anyway, it's inflection point trading. It's IKPT. All right. Again, what our members are saying, because of Theo, I closed my entire portfolio with profits, 0 loss. This is something that it's important to me. By the way, I know it says today, but this was actually earlier on in the year in the depths of a market that was tanking. But I just want to show you that because you've got a marketplace that's down. At one point, the Qs were down over 32% year-to-date basis. And we're getting emails that people are like, no, I closed my position, didn't take a loss at all. Okay, that matters to me. And it really does matter to me. So those of you, if you're enrolling right now, okay, fantastic. And by the way, enroll, I'm going to go through the bonus right now. When I say bonus, I'm just going to show you everything that TheoTrade includes. We're only going to be another few moments. We're going to show you everything that TheoTrade includes. And then I'm going to answer some individual questions for you guys. So by the way, yeah, you can definitely fund a Tastyworks account. Tastyworks, I say Tastyworks, this is Tasty. Tastyworks is, I mean, they're the best for this type of trading. They are. There's nobody else like Tastyworks that allows you, okay, the flexibility and variability to be able to trade certain strategies inside of a retirement account. Okay. And for those of you who don't know Tastyworks comes from the founders of thinkorswim. So I'll tell you everything that TheoTrade includes. So we go beyond a class or an indicator. We get, like, from the get-go, people want everything to be able to trade, everything to invest at one place and one price. Like, I'm sure that many of you tuned in today, and there's a lot of people tuned in today, have gone to like all these different courses and stuff, and you paid thousands of dollars. I'm going to tell you right now, check this out. For 297 bucks, okay, the education that you're going to get for 300 bucks, you could spend $30,000 at other firms and it will pale in comparison, right? I'm going to show you the instructors, but we give you everything from day one, okay? Everything you're going to need to get involved in this business. And if there's something that you think that, we're missing, email me, tell us about it. We want to know. Okay, the first bonus, Quick Start Beginner's Guide. What is a Quick Start Beginner's Guide? This is just like the options 101, options 201. It's just to get you off in the right, the right direction. Bonus number 2, you get over 100 different trading classes. What's that even look like? Okay, well, here's the inflection point trading. But when I say there's over 100 different classes, look, our classes are broken into options, option newbies, technical analysis. Just because I'm not in a technical analysis, I'm the resident option geek, right? Day trading, stock trading, bonds, pairs trading, trend trading, hedging, mindset. We even have an in-house psychologist. You get access to all the classes, okay, from day one. Literally every class that we've done, and every class has highly detailed, criteria in it as well, okay? So that's bonus number 2. Bonus number 3, all access TheoTrade VIP membership, okay? The easiest way to explain what that means, let's go back over to Theo for a second, okay? On TheoTrade, we have a chat room. What does the chat room do? Okay, we're broadcasting live right now. This is actually happens to be Tony Rago. He actually trades intraday, okay, and mentions his setups down below. Okay, tricky entry, short versus 33. So he's trading in real time. Okay, he's trading in real time, and you get to follow him. This broadcasts for 6 hours a day. In addition to that, you get 5 different trading portfolios, text and push notifications. Okay, it's all part of it, and okay, you get to email us, as I already mentioned. All right, here are the instructors: Jeff Bierman, Matt Williamson, Corey Rosenblum, Brandon Chapman, Steve Miller, Tony Rago, Blake Young. Okay, that's our core team over here. Everyone has a minimum of 15 years of market experience. Okay, like for instance, Jeff Bierman, he's also a professor of finance at DePaul in Chicago. Okay. Jeff Bierman holds a CMT. Corey Rosenblum holds a CMT. Brandon Chapman holds a CMT. Steve Miller. Okay. Steve Miller is actually also our in-house psychologist. Tony Rago, intraday. Blake Young, market profile, futures, currency, commodities trader. Blake also ran a hedge fund for years. Okay. This is our crew kind of working from home. Onward and upward, we give you access to every proprietary indicator and scan. If we build code, okay, if we build code, and I'll give you an idea of what code looks like these auto expected moves, okay? We build code, we give you all the codes. In fact, I'm going to give you the auto expected move here momentarily, okay? So every single scan that we have, every single proprietary indicator, we give them to you. Bonus 4, TheoTheo Live portfolio. This is the inflection point trading system. These are the trade alerts, okay? We give you access to the portfolio, no holds barred approach. You get to see every hedge, every trade I place. We text the stuff out to you, and we have the TheoTheo small portfolio. Again, this is the inflection point strategy, literally opening positions, closing positions. I know that some people, they cannot make it live to every single session in here. That's fine. Okay. We do an update video. The video is 12 minutes. It happens every Friday. It'll give you all the moves that we make in the portfolios. So if you can't like join live, it's fine. Like, don't think that you have to sit in front of your screen. You're like, I have a job, man. I can't watch this guy trade live all day. You don't have to. Okay. If you just come here and, grab the, the inflection point trading system and just look at the trade alerts, that's fine. Okay. Listen, do we do more than that? Yeah. Okay. I guess for $297, do you want to be overwhelmed or underwhelmed? Okay. Everybody's overwhelmed when they come to TheoTrade. That's the idea, right? Bonus number 5, technical analysis toolkit. Okay, we're heavy in technical analysis, not necessarily me, but the crew here is. Okay, some of them are like writing their own code. Bonus number 6, the day trading treasure chest. Tony Rago is our intraday trader. Okay, Corey Rosenblum is well known for trend trading. We have got, again, all right, a dozen plus classes specifically on intraday or day trading. Bonus number 7, mindset mastery. This is one I always tell people, I would write this one down. Okay. This is a class. Again, the whole thing is $297. That's a class you can't live without. Okay. We could charge $1,000 easily just for this one class. Steve Miller. Okay. It's one of the best classes I've ever seen, hands down, anywhere. So I'm telling you, you can go out and you could pay $30,000 for education. Okay. And it'll pale in comparison. We have people all the time that email us and say, I spent $15,000 in an education and realized within an hour of cruising around your site that you guys have much more. Bonus number 8, it's quick start guide, okay, to selling premium. So this just gets you started selling premium and a quick start guide. Again, what our members are saying, okay, TheoTrade is the first educational trading service that I'm actually making profit with, and one which I can see a pathway to retirement, okay? We include everything: classes, coaching, email access, live trading, mobile access. By the way, we have a full mobile app where you can see, just popping this up here, okay, on the mobile app. Let me actually pull up Theo, okay, Theo. You can actually see all of the trades. So not only can you watch all of the videos, you can see the push notifications, the trades, everything. It doesn't cost anything extra to do that. We've literally built like the Netflix for traders. We're $297 for 3 months, okay? TheoTrade.com/I as in igloo, P as in Pete, T as in Tom, okay? Everything that's included, I'll go through there. And by the way, we still have new monthly classes. Like for example, Blake Young just did Z spreads. Z spreads smash hit. Like people absolutely love that. Define risk, volatility trading strategy. I'm serious, you'll love it. If inflection point trades is what we're focusing on right now, because inflection point trades works in this chaos, right? But Z spreads, when you're ready to proliferate out, you guys will love some of the other classes that we do, right? So there's a 90-day money back guarantee. So when you're enrolling for this, you're enrolling for 90 days. Every ounce of the first 90 days, okay, if you're not happy, there's no stipulations, money back guarantee, no excuses. Okay, you get to view the inflection point spread class. There's nothing I can do about this. If you receive a refund, we still keep bonus number 1. Bonus number 1, by the way, happens to be the getting started. Just email support@TheoTrade to receive a full refund. Get into TheoTrade now. There's 30 spots on the riskless deal. There is one thing we do today to incentivize you to enroll. The riskless trade. When I say it's a riskless trade, there's a 90-day, again, a 90-day money back guarantee. On the riskless trade, we opened 30 spots today, okay? Because again, first of all, it's a matter of trade size. Next, it's a matter of unlimited email mentoring, okay? But we want you to send us our trades. The $297 offer has never been available before with inflection point trading and live portfolios. And again, with a no stipulations money back guarantee. So I'm going to answer a few questions in here, but again, closed year-to-date profit from Ultima has paid for my yearly TheoTrade subscription. Okay, this is everything you get. Obviously, inflection point tradings, quick start beginner's guide, over 100 classes, access to our chat room and all the portfolios, the TheoTheta portfolio, the technical analysis toolkit, day trading treasure chest, mindset mastery, quick start guide to being able to sell premium. Okay, let's come in here. If you follow me right now to TheoTrade.com/IPT. Okay, I just want to reiterate one aspect on here. Okay, when you come in here and click add to cart, and I'll reiterate, there are 30 riskless spots left. When you come in and click add to cart, please, again, put your phone number in. We just have so many people that don't put the phone number in. We're not going to call you. Okay. Just putting the phone number in for the text messaging in here. When it comes to credit card payment, you select whatever works for you. Okay. Like, again, whatever works for you, 149, 100, just break it down. Okay. Again, it's only 297 bucks for 3 months, and you can learn a huge amount. Okay. And I know a lot of people, they come in here like, I'm going to learn a bunch, and then I'm going to cancel. That's fine. We get it. We have 6,000 people already here. Like, we've seen that movie before. The irony is, even those that cancel, okay, they still come back. To 6,000 clients, people always come back. We want everyone that's here, again, to want to be here. So I'll pop that address up there once again. I'm looking for it over here. It's TheoTrade.com/IPT. Okay. By the way, I'll read off your first name, okay, as you enroll, just to let you know. It takes me about 5 to 7 minutes before I actually see your enrollment here. Anyway, if you go to TheoTrade.com/IPT, you can actually download the auto expected move indicator. Those of you that are enrolling for this, you need not do that, okay? Because we give you access to everything anyway, but the auto expected move indicator down towards the bottom of that page. All right, so let me answer a couple of questions in here, okay? Just general questions. And again, these are just, various emails that have actually come in from clientele. Let's get down to business here. Couple of general questions, then some specifics. First of all, people always say, what do you need to get started? An internet connection. I mean, I make the argument you don't even really need a laptop. You can even be using a mobile device, because you actually can trade pretty extensively off the mobile device now. So we give you everything you're going to need to get started, from absolute novice to the most extreme trader. The next thing is, we're not a membership. Okay, we do not auto renew. So really important, at least to me, it's really important. This is $297. After 3 months, what do? You determine after 3 months if you want to do it again. That's up to you. Okay. Number 3, we're providing, okay, weekly TheoTheta videos, so you can follow all the moves, right? Okay. So when I say that, it's a 12-minute video that updates you on everything that we did throughout the course of the week. Number 4, we archive everything. Every word spoken on TheoTrade is archived. It's also put on mobile. You can even download onto your mobile device and then watch it even when you're offline. Okay. Number 5, we provide you access to mobile. You can download the archives, view at your leisure. Okay. Number 6, add your cell phone number. Okay. When enrolling, to receive text alerts, that's part of it in here. All right. Number 7, you can email us anytime, receive a response within 24 hours. The only caveat about emailing us, got to give us 24 hours, because I'll tell you what, people will email us. Okay. People will email us with 5 minutes to go on an expiration Friday. Right. Okay. Number 8, you're going to gain access to every course we've done in the previous 7 years. Classes, coaching, live trading sessions, all archives of searchable trading topics, you name it. Number 9, variations of all the trades, okay, available or can be done in an IRA with as little as $2,000. Okay. Number 10, we can help you get approved for option trading at several major brokers. Some people say that my broker won't let me do this. Well, we have brokers that'll let you do anything you want. Okay. There are 30 riskless spots available. Get results, take action, enroll for TheoTrade. And again, the one point I constantly make here, listen, there's no risk. There's no risk at all. Like, if you're not happy with this at any point, okay, I get it. Take the time, listen to some of the classes. If it's not for you, it's 297 bucks. Get your money back. Okay. And I really have absolutely no problem with that, whatsoever. Let me take a couple of your individual questions. And again, I'm reading some individual questions on here, and then I will kind of wrap things up a bit. And again, let me pop up this again. Just click add to cart. It's $297. You can split up the monthly payments. And again, the web address over here, it's TheoTrade.com/IPT. First question said, do you place an additional hedge for each put position you put on? The answer is absolutely not. We do not place additional hedges for every put. One hedge can support as many as 4 puts, depending upon experience level. So that's something that we even cover in depth in the class. So the class actually explains a couple of different variations of the inflection point trading system. Okay, one of the major ones happens to be how many puts can each hedge support? Okay. The second question said, what about VIX hedges? VIX, okay, is off the table right now because the VIX is already pricing forward risk to be higher. What that basically means is this: the VIX is not going to work as a good hedge at present time because the VIX is already pricing a lot of risk. I mean, a lot of people are not familiar with VIX options. VIX options are a convoluted mess, but it's again, those VIX options, they do price a heavy amount of risk. All right, I'm just looking at some of the other questions in here as we go along. Make sure we're good to go. Okay to go. All right, next question on here. All right, I'm just looking through, making sure everybody is good to go. All right, onward and upward from here. Fantastic. Next question: short-term hedging against long-term options. Okay, yeah. So we are using shorter-term hedges. Okay, and you say against long-term options. So if you think about this option for 114 days that you have here, and the shorter term hedge that you have here, a 114-day option may not be on for but 30 days. So, okay, one does meet the other. So it doesn't matter that you have this short-term hedge to this long-term option because the long-term option is not being held for 114 days, not even close. So I think that that's imperative to kind of understand on that particular front. Somebody came in and are the classes, the archive classes, everything's included. Every archive class. When I say archive classes, okay, we've got classes archived from literally the beginning of TheoTrade in 2016. So everything is archived. And that's, it's important that we always mention that not only is everything archived, everything is also searchable. You can actually come in there and kind of search through and dig through the archive. You like a particular topic in there. Okay, onward and upward from there. Okay. Somebody said, Don, are we doing 90 days to expiration? Okay, because he said the last time I came here, you were doing 90 days to expiration. Okay, yeah, George, there's actually a variance in the criteria. When I say there's a variance, there's a window. And the window says you can sell options from here to here. So 90 days actually does incorporate in there. All right, that works in there. So George, there's no change on that particular front. Okay. Next person said, I see the profitability in the expiration graph. How do you manage the trade? Okay, if it does sell off dramatically right away. Actually, if the trade sells off dramatically right away, there's a very likely chance that I'm in a position like that right now. My hedge, I'll just show you. My hedge is worth $37. I only paid $18.75 for the hedge. Okay, how do I know? Where is it? There it is. There's the hedge. I paid $18.75 for a hedge. The hedge, okay, is now presently worth, and again, I'll highlight this. The hedge itself is worth 37 bucks. I am taking a little bit of a loss on the put, but the hedge is worth way more. Okay, the hedge is worth way more than I had anticipated. So this is one that right off the bat, it isn't working, but I'm still wildly profitable. Okay, it's part of the inflection point trading system. Okay, and you guys will learn exactly how to do that. Somebody said, why buy Tesla calls today? Okay, I have no idea. I would never buy a Tesla call today. That's just not going to fit in in any of the logic that we use. Listen, we don't take chances here. We go out. Okay, we try to collect premium, get back, reduce risk, and earn a living. I mean, and this is like any other living. This is not about going out there and swinging for the fences out there. And I think that's critically important. With that, I want to thank everybody for tuning in today. Again, go to TheoTrade.com/I is in igloo, P is in Pete, T is in Tom, TheoTrade.com/IPT. Okay, I do hope you guys realize, listen, we're live right now. When I say live right now, okay, we are running live. I'm going to refresh this. This should be Corey Rosenblum into the close. Okay. We even have a chat after the close. So join us live. Join us live here in the next hour. Right after you enroll, you can access right into TheoTrade. Again, Corey Rosenblum is live. It's going to be Jeff Bierman, Brandon Chapman right after the close. Thanks everybody for tuning in today. Again, Hit us if you have any questions over here at theotrade.com/IPT. Have a wonderful afternoon. Bye-bye.